I'm Steve Forbes. You're watching Traders Nation.
Welcome back. You are tuned in, Traders Nation. My pleasure to have with us here today Sam McElroy. He's co-founder at Financial Investments. Sam, welcome to Traders Nation. How are you today?
I'm doing well. How are you?
I'm doing fantastic. Thanks, Sam. Hey, Sam, what happened with the S&P 500 and Nasdaq yesterday? It's drawn down yesterday's market. What's going on there?
Well, there could be a number of things that are happening, and I think one of the bigger issues that we're running into is that a lot of the movement we've seen both last week and this week as far as the Nasdaq, Dow Jones, S&P has really been largely driven off of speculation. And I think anytime that happens, sometimes there's a tendency for it to, overinflate and sometimes, revert back to the mean or correct a little bit. And I think that's partially what we were seeing. So
sure.
We had a lot of things that were kind of bouncing around, trying to figure out who was going to benefit the most from the tax plans that's in the process of being done here.
Sure.
And I think that's one of the reasons why at first we saw a lot of the tech companies kind of go down a little bit, just because they're deemed to basically benefit less than some other types of companies. And even yesterday, we saw an increase in some of the indices, but then we saw the S&P and some of the other ones kind of pull back a little bit. And I think it was partially just trying to get a balance of, okay, where should these companies be valued in light of new information?
Sure. All right. Yeah, good points. Let's look at that. You've got Amazon, you got Facebook. Not quite so much the brick and mortar as you're going to have in some of these other companies, IBM, et cetera, right? So maybe there's a little bit of uncertainty there. And certainly these highs, everybody, a little pullback is kind of healthy, isn't it? And we're seeing it flattening out here today.
Yeah, it is healthy. I think from a market standpoint, maybe not so healthy for people that are relying on consistency.
Yeah, certainly everybody loves it to go straight up, right, and never do anything else, right? But pullbacks tend to be healthy when you get overextended, not only in the market, but any of these particular issues like that we've been seeing. It's been bonkers. Little pullback is healthy, and some people kind of need to get used to that, would you say?
Yeah, I would say that, if what is happening in the market is uncomfortable for you, then it's a good chance that it's the type of investor that really has either too much in the market or may have misaligned purposes. There may be other asset classes, other types of investments that would be better suited for them because the market should be expected to act as the market expects. I think sometimes, we look at a market which is really based off of speculation and we treat it as if it's a certainty just because we can look at some track record and say, well, over the last year or 5 years, 10 years, whatever, it's performed like this.
Sure.
And we tend to become overly complacent in the fact that it's going to continue to perform like that.
Yeah.
But at the end of the day, the market has a lot of different variables. It's not just the valuations of the companies that are in it, but it's also the reactivity to the investors and, investor confidence and their activity also. And that's going to create volatility.
Yeah. Well, and this is where they need to come and see you because they need to, if they're not used to that type of volatility, right, Sam? It's just that they need to reallocate their portfolio, get into some safe areas, and maybe take a little risk in some certain percentages of other areas. That's not my line of work, but certainly that's yours, and maybe they need to come see you, and we'll let folks know how they can get all of you. All right, so let's talk about some of these brick and mortar businesses. How can they even compete with these e-commerce giants? For instance, like Amazon, they're going to run into some problems there.
Well, yes and no. I think for any business or any industry, and it doesn't matter whether you're brick and mortar or whether you're relying more on a cloud or a tech platform or something like that, I think the question is always going to be around innovation. Supply and demand in economics, in a sense, is the great equalizer because either you have a good methodology for solving a problem and you can do it efficiently in enough times to be profitable or you can't.
Right.
I think one of the disadvantages of the brick and mortar building is that not only does it sometimes increase overhead, but it also reduces flexibility. But at the same time, I would say that there is a lot of really good established companies that we would call wide moat companies that are still brick and mortar companies. They're good enough at what they do that that's not a disincentive for them. But I think especially for startups or for other companies that are trying to crack into certain spaces, is probably an advantage to be nimble, and having brick and mortar buildings may restrict you from being able to do so.
What a perfect keyword, nimble. They need to learn to adjust, don't they? It's an ever-changing environment. You need to adjust and be nimble to change to that. Otherwise, you're going to be left behind, right?
Yeah. I think that, the speed at which change is happening now is probably accelerating.
Breakneck.
Yeah,
breakneck, right? So, put on your 5-point harness. Put on your 5-point harness, right? Strap in, because we got change. We got change coming. All right. So let me ask you this. All right, go ahead.
No, we're getting ready to ask.
All right. Santa Claus rally. Traders love to think a Santa Claus rally is going to come. You think we may see one at the end of the year, beginning of 2018?
If I had to guess, I would say we probably should. Okay. I think that we are seeing investor confidence being higher, and I think what goes along with that is probably people just feeling more confident in the economy as a whole,
sure.
And in their ability to be able to spend and wanting to be able to spend. Mm-hmm. I think that it's probably likely that we should see some good action, from the holidays and from people be going out and spending money and traveling, and also buying gifts and presents and stuff like that.
Yeah.
So barring something crazy, happening that derails or shakes that confidence where people now want to hoard money, we should see, I think, a little bit of a Santa Claus rally.
Nice. I sure hope so. And folks really are optimistic. I talk to a lot of people out there, all size, shapes, you name it, and I've talked to them. And there's optimism. There's the buzz that's in the air. It's static. You can almost sense it and feel it and hear it, Sam, in the voices of not only people, but small business, et cetera. And I think they're going to let loose of those purse strings a little bit more and more. And I think it's going to help with that. Okay. GOP passed a tax bill 51-49 right along party lines. Real quickly, who's the winners and losers on this?
I don't know that we know yet.
We'll find out, won't we?
I think about so much legislation that gets passed, and oftentimes there's this prolonged process and committees and stuff like that.
Yeah.
I think that because the initial information that came out about the tax plan was that it was not going to be deficit neutral, they kind of went into rush mode trying to figure out, okay, well, how do we tweak certain things?
Sure.
I don't know that everybody has a really good handle on what the final provisions even look like yet, and it still has to be reconciled between the two houses as well.
Right.
I think what we can guess, though, is that corporations that have typically a higher effective tax rate are probably going to stand to benefit the most. I think that businesses that already had a lower effective tax rate in certain individuals maybe won't get as much of a benefit as they were hoping for. But I think it's going to wait to be seen as far as what the initial impact is, and then also what the ripple effects are.
Okay. All right. So as always with the government, hurry up and wait and see is how I think this is going to end up, right? Hurry up, wait and see.
Yeah.
All right. So we got probably about a minute and a half. Let's talk about economic growth. You see that coming as we continue. We end up this year. We start rolling into 2018. You think GDP is going to climb? Economic growth continue? Are we going to see that into 18 and forward?
Well, I think that's a really good question, and as a sub-question to that, I think it's also a good question to ask, all right, if we do have GDP growth, where is it going to come from?
Yeah.
Right now, a lot of the GDP growth that I feel like we're seeing is really more corporation spend, more company spend, more business spend.
Okay.
What I'd really like to see is the average household having more discretionary income and them being able to spur some of the growth. And what I'm worried about is, even if we had a best case scenario and let's say, the average wage were to increase and people had a little bit more money in their pocket and we were able to go out and spend more money, I'm wondering if we're going to bump up against just a demographic kind of wave here, because I'm seeing a lot of our clients who are retired basically just not in spend mode. Right. They're conserving money, they're downsizing, et cetera.
We're out of time. Hey, Sam, I wonder if that household is going to be a trailing effect on GDP. Where can we find you real quick, Sam?
Yeah, so the easiest way is probably our website. It's www.atfinancial.com. So A as in apple, T as in Tom, financial.com.
Head on over there today. Sam, thanks for being with us today. We appreciate it.